Hey, good morning. It's Bob Trade Genius. It's the 19th of August. I want to do a little bit more macro on gold. And I think a lot of us who love gold are, a bit frustrated with just how difficult it's become to get any kind of sustainable move. And if I went all the way out to a monthly chart here, and if you look back, this is the basically the breaking of that bubble move on gold at 1923, and it's just been retracing down for quite some time. We've had a tradable bounce here, and then we're still underneath the midline here of what is a standard deviation of volatility, and a lot of traders, big money uses a lot of this, so you have to respect it. And this is the value area for the monthly, and the monthly I have set up here is the monthly is 20 years. So this is 20 years of volume, and there's two low value areas here, and then there's the two volume areas, and then there's the value area too. I think we have a good shot at getting down to 1024 here at some point, but I think we're going to get a tradable bounce first. And so the value area here is at 24, but also a low volume area too, and those tend to be magnets. And as long as we stay underneath this 1263 68 area, is that I think it's going to pull back down here. I don't think the dollar is going to get much weaker anytime soon. You just have to look around the world, what's going to compete with it. And and you have to understand, gold prices aren't really moving. It's really the relative value of the dollar, or the ability of the dollar to purchase more gold ounces. And so what we're doing here is now we're looking, and so now I'm saying, all right, well, it's on the mat, and now we have to wait and see if we get another move higher. So then if we go and we look at the weekly right here is also on the mat. This is really the difference between is volume on the bid or volume on the ask. And obviously they've just been shorting the heck out of gold and really pushing it down. Encouraging here a bit of a hammer on the weekly. And then if we look at the daily, most encouraging of all is that it blew through the green line of our magic channel here. And a nice hammer on Thursday, follow through on Friday, and if we get above 1201, then magically 1270 is the midpoint here. And I think there's a chance here we'll get short-term 1235, 1237 area, and then we get up to this move here. And the reason why I think that is the positioning of the futures traders is so incredibly lopsided right now, that any kind of weakness in the dollar will force a lot of these guys off that trade, and we're just going to get a massive bounce. And a lot of times when these things break the magic channel and come back up, it'll come back to the midpoint. So this is a good risk reward area if you're going to be trading gold. Is that I would set my first stop here at 1166, and then the second stop after that would be at 1178. And I'm going to bring up GLD because most people don't trade the futures. Give you another look here, and I would do the same thing here. If I would be buying it, I would set my stop here at 111.06, and then as it moves higher and breaks into this channel, and it breaks 113, then you can put your stop up to here. And so I'm going to personally wait until we break back into this channel, and once we break into this channel, then I'll probably buy some call options, or I'll just go back into the miners and take a look at some mining options, maybe Goro or something like that, and add to that position and look for the run up higher. But I just thought I'd share that with you. It's kind of good news and bad news, and you just have to these bottoms can be tricky. There could be another flush, but I think we're pretty close to a tradable bottom here, and now you got your plan. So that would be my plan of attack. I'm going to wait for it to come back into the channel, set a stop here, and look for a target right here as first run. Thanks for listening. I'll catch you guys later. Bye bye.